Hi, everyone. Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy Cruz.
And this will?
Brian Landeros, Lends Money on Instagram.
Whoa.
That's a new name change, right?
Yeah, we actually changed it just because it's a lot easier to find me. So Brian Landeros, Lends Money _.
So it's longer. Great.
Longer. But now you get my whole name in there.
Well, this week, guys, we got to talk about a bunch of stuff. Obviously, the market has shifted a ton. In the previous weeks, we talked about things like reverse mortgage. We talked about the Fed and what they're talking about and what they're looking at down range, as they say, in the time horizon for this year. We talked about the Cal HFA program. Today, we're going to talk about inventory. We're going to talk about rates, pulse of the market, and how to build relationships during this specific market cycle. Because in some ways, this is very similar to the past, and in some ways, it's very different. So I want to unpack some of those things today. But let's first talk about listing inventory if we can.
Whoa.
What are we seeing here locally? I know what national numbers are. Well, I'll talk about that in a second. But what are you guys seeing here, at least on the front lines right now?
Tumbleweeds and there's no listings. I mean, it's the ongoing crisis of low inventory, no houses, and that just causes houses to spike up in prices. So I feel it's been like the lagging story for the last couple of months, maybe even more than a year, where inventory just hasn't got it together because of the fact that sellers aren't wanting to sell because of their situation that they're so comfortable in. Which I don't, you can't blame them.
Can't blame them.
Yeah, not at all.
Yeah, like you said a couple shows ago, we practically refinanced everybody. In 2
basically.
years.
So it's
we did. I mean, geez. I think that year that we originated was like 4.5 trillion when the average is like 1.5 trillion. Like, oh my God, that's a lot of, that's a whole lot of people.
Yeah.
But no, springtime is usually the time that, hey, the sun comes out. Obviously, thank goodness we've no more rain, guys. I don't feel like we're in Seattle, right?
Right. For the past month.
So I think that's maybe one of the delays is the rainy season. But normally, kidding aside, spring is usually the time when people are putting their houses on the market.
Right.
Like, let's put this house on the market. Let's go. The holidays are going to come. Let's be in there, before Halloween, Thanksgiving. I can't believe I'm already saying those things. But, geez, we're already in, right? 4 months in to the year. And so that's the time. But guess what's not happening?
The market isn't performing how it usually does.
They're not showing up as much as we normally would have thought.
Absolutely. Yeah. You'd think by now you'd submit an offer, right? And you're getting a counter offer. We're like, we'll take your offer.
Yeah. Right.
You're putting a 2-1 buy down. We'll take your offer. Well, guess what? We're not. We're competing against people that aren't offering those things.
Right.
We actually got an offer just accepted where the seller is actually asking like, hey, can I be in there? You close and I'll be in there rent free. I thought those days were over, guys.
No, and it's crazy that you mentioned that because even with the offers, we're still seeing multiple offers on listings. And when I speak to the listing agents, they say like the demand is still there. The open houses are showing multiple people coming in.
Yeah.
So it's just like, wow, like, okay, like everything on the headlines is saying one thing, but I like to make it a point, and a case point is that, everything that you see on the big headlines isn't necessarily the same for your micro market.
Yes.
And as we see here in San Diego, it's a lot different than what the numbers and stats add up for what you see on CNBC or Housing Wire or the big, broadcasting television news.
Yeah. Well, it's I'm glad you said that. Like, it's super relative, right? So not only micro economy where your local region is, your neighborhood, but also just, don't just think because it's saying something nationally that it's also bad. Now, I understand we have to talk about things that are difficult and we have to translate what that means and how to take advantage in a market like this. I get that point. I guess what I'm trying to say here is like, it's relative. So, one of the articles I brought with me today from Housing Wire was talking about how weekly listing numbers are significantly down compared to years past. Well, of course they are. So, they're citing numbers from 2015, 16, 17, where it's like 80,000, 85,000. And they're like, oh, well, 2023 is only 55,000. Now, hold on. That's still 55,000. That's not zero.
Yeah.
It'd be different if it was zero. So yes, proportionally from 85,000 to 55,000, yes, okay, steep percentage decline. But it's not zero. It's still 55,000 new listings.
Yes, but let's also keep in mind, there's more people, there's more affordability. The millionaires are getting older. Now they're buying. So our population is growing. And therefore, if the population is growing, the housing is not being built or there's any availability to that, that's where it gets concerning, right?
Yeah.
That's where we're getting, that's where we're in where we're at.
Well, and also though, like lines at open houses still, I shouldn't say lines, but I mean just the fact that there's more than a dozen people.
Well, you're not too far away from saying lines because people are literally waiting.
Yeah.
But what's interesting though is the type of person at the house. So what I've been hearing is that in the houses that need a lot more work, they're getting a lot more people who don't need a loan because they got cash, they got an investor of some sort. But the people that are looking to buy and occupy, those those is where there's more people that are making bids and they're trying to outcompete each other. They maybe one comes in with a 2-1 buy down, the other one doesn't. The seller's like, hey, I want the one that's got a better deal. So I think right now the type of need is driving a lot of what the listing is drawing as far as buyers.
Absolutely.
No, and like you mentioned, I think in the conversation we had previous weeks, right now it does make sense to buy a rental. So I could see why some people, if the numbers make sense, are jumping towards those opportunities. But on the buyer side, on the regular, for your primary residence, what I have been seeing is that they're stuck at a certain point because of the way the market is performing. Mm-hmm. So even with rates fluctuating every day, one day they're approved for X, the other day they're approved for Y. So it's like it fluctuates up and down. In one week, they could have a higher approval than the previous week. So it's really tough for the buyer that, is really determining or has their DTI just maxed out or is literally putting everything on that one offer. They're not going to have much wiggle room. And what we've been seeing is that listing agents and sellers still are asking for offers over asking price, right? So once you can't go above that asking price, it's like, you're capped out. You have to either come down at a lower purchase price, which then falls back to the same problem.
The same problem.
Inventory for the price point that they're looking for.
Yeah,
that's correct.
I think part of it, like I know that just situationally for a lot of people, they're hunkered down. Yeah. And again, like the headlines are going to say, "Are we in a recession?" Some people say, "Oh, we're in a recession." Oh, there's headwinds ahead. Like I understand the mechanics of what they're talking about. But when that's interpreted by people at the personal level, they do hunker down because they're trying to reduce risk in their life. So I think that's one thing that maybe is not able to be measured even. It's just the idea of reducing risk in order to be fiscally responsible personally still. Yeah. I think that's actually weighing in on some people's faces.
Yeah, I like that.
Yeah, he's trying to see that definitely.
Yeah. All right, so what do we do, guys? What do we say? We get builders. Come on, start building, please.
Yeah. Well, we got to get buyers to go look and get creative out there. I think that the people that there's only be one person that's going to get the listing, their offer accepted. Yeah. For all the other 10 that don't, get back out there. Go back and find a house. Keep your eyes open for new programs, new opportunities. I've heard of realtors that go and door knock a neighborhood in the neighborhood someone wants to look at or live in, and the houses aren't even listed. Yeah. It's like, hey, you want to sell your house?
Yeah. You have to go find your opportunity, right? So you have to go out there and make destiny happen for yourself right now. And I feel that, like we've mentioned earlier, like people are going to have to get creative in order to, get these listings. So, what I saw is that somebody went and just said, hey, that's open house. Somebody went in there with guns. And then that's going to delay it for 2 weeks. So, now we have more
Come on.
Whoa. Wow. That's a good one. I was like, is that serious? Like, is that something that's really happening?
That's what I'm saying. That I mean, you're going to have to get creative. And actually, Jose, one of the realtors we work with, he went out to a community in Tierra Santa, which one of our clients wants a home in, which there is no homes for the price point that they want. So he took it upon himself to go knock a $700 unit complex to try to find an opportunity, to try to find somebody that's willing or wanting to sell. Yeah. And I think that's that's the name of the game right now, going to shaking trees and seeing what's best can be for the situation for clients.
Yeah.
Well, and the numbers reflect that. I mean, purchase applications are down. So like when we're talking about like the pulse of the market, like the report I got here says, purchase applications are down 35% year over year. Obviously that's reflected across the board. Again, there's microeconomics in that too. Certain neighborhoods and certain towns and states are different than others, but I saw a chart from the Mortgage Bankers Association that showed loan application volume at its lowest since like 1995.
Jeez.
And that's just kind of par for the course for everyone that we know in this industry, even outside our own company. Yeah. But for us, I think our pivot point is this time when we've started to talk about, here's what to do financially. You need to work on your credit right now? Work on your credit. Yeah. You need to get your personal budget lined up in order? Get that in order.
That now.
You need to prepare for the next 12, 24, 36 months? Start doing that now. Yeah. And where you need like your wealth accumulation team or your wealth preservation team, this is the time to do that kind of stuff.
Absolutely. It's all about the 3 P's.
What are they?
Predict, prepare,
persevere.
That's it.
That's right.
And it actually goes right into one of the questions you asked right here on the notes is what are people saying? I feel right now people truly want to know what's happening with the market, right? One of the points we make is that once rates and low rates are done being sold by people that, that's all they had to offer. Well, what's next? People want to know what's really happening in the market, let alone their micro market, and then how they can benefit from it and get ahead, or how it's going to affect them. Yeah. And I feel that's one of the things that I hear a lot from, the people that I'm speaking to, the clients that I'm hearing is like, okay, well, there's all these headlines. So what truly is happening and how does that play out for me, my situation? Mm-hmm. So I feel that's one of the things that is very, very common right now because there's so much information. You go on YouTube, you go everywhere. Everybody's saying something. Everybody's going to, and you're going to find what you want to hear. That's the thing, right?
Yeah,
but that doesn't always serve its purpose for what you want to do.
That's absolutely right.
So therefore, I feel it's, sticking being very aware of what's happening in your own backyard.
Yeah.
Not what's happening up the street, down the street, in your own house. It's very different what could be happening up the street. So really focus on what you have here. Yeah.
No, absolutely. Absolutely. And then the media, I mean, it's just overpowering. It's overwhelming on how much information and negativity there's out there with everything.
Yeah.
And I just think people are just sitting on the fence. Hey, well, I'm just not going to do that. I'm going to wait till the market collapses.
Exactly.
This is a very different market. There's no comparison. People are trying to say, well, how do we compare it to 2008? This is a whole different market.
Super different.
And I think that's what people are trying to understand or figure out, and you can't, because it's not the same, and people are trying to base it off past experience.
The culprits are different.
I spoke to Clarissa's mom that she wants to buy, and she's like, well, I bought it in 2008 and this seems very similar. And I'm like, I could see why you feel that way, right? But did you know that equity's at its highest, rates are at their lowest? We're not over leveraged. People are still paying their mortgages because the rate is so stinking low. So I told her, I'm like, I understand where the fear comes from, and it's understandable because that's what you already experienced. But this is what's happening. This is what you can do. And on the contrary, seeing where you're at right now is going to actually give you the clarity of whether you should wait or move forward.
That's right.
Because her response was like, well, maybe should I wait till September? How's the market? Should I wait till September? I'm like, well, why would you want to wait till September? What's the reason? What's your motivation? And she's like, well, I want to see if prices are going to go lower. I'm like, well, think about it like this. Since the year began, prices haven't really dropped, right? Maybe they dipped a little bit, but as we see,
they're up.
they're right back up, right?
Back up.
So look, I don't have a crystal ball, but I do follow the data, and I do believe in the numbers. So based on what we're seeing, we don't expect it to drop like we saw in 2008.
And even that's conditional. It depends on what neighborhood you're talking about.
100%.
Like there's neighborhoods out where it's more rural, like they are having some price drops there, but they're not happening in the suburbs like we're living in right here.
Well, we did have it. I mean, I'm part of HomeBot, right? So I actually provided to all my clients HomeBot. Some of you you're using it. And I kind of saw the little thing, how you seen home prices going up. And then I started seeing it I was like doing one of these faces like, oh, dang. And then now I'm starting to see it. And back up, I'm like, what? Like, what's going on? Last quarter, 8%, increase in equity for people. Like, come on now.
And that's exactly what I feel homeowners are sticking to, and that's why they don't want to sell, because it's like, why should I jeopardize my current situation for the unknown?
If they don't need to, they don't need to.
And that's exactly why I feel like they're not selling, because they don't need to.
Well, here's the thing with that, most people with the rates as being as low as they were when we refinanced practically, everyone. The whole nation. They're noticing, well, hey, and rent's going up. Well, if my payment's $2,500 and I can rent this out for $4,000, that's $1,500. Maybe I'll just go into buy another home with 5% down and keep this property.
People are becoming landlords, not sellers.
That's it. That's what I'm seeing a lot of.
Well, and so I think in the evolution of that, and with all the changing dynamics, kind of the undercurrent of all these moving parts, there are things that I think they're fundamentally 100% different than 2008 and 9. Even though they might feel the same, they're fundamentally different. We're not going to get into all the technical aspects of that. But this is the time where I think, just like last time, this is something that is similar, this is when you build relationships. This is when you kind of circle your wagons with the people who you are going to entrust your future financial decisions with. So if you do not have a financial planner, you're looking for one. If you don't have a trust estate attorney, you're looking for one. You don't got a good tax person, you're finding one. You don't got a loan officer in your corner, you're getting one. Put your realtor on that team. Get and insulate yourself, not to be have a scarcity mindset, but get your team together.
That's it.
And so we're kind of on our end of it from the loan side, we're coming hard with education right now. We're bringing consistency in our shows, consistency in our conversations, our communications, because obviously for all our past clients we're on that team, but we want all of our past clients who are listening and watching, you need to go get those other people. If you don't have them, you need to ask us, and we'll introduce you to people that can help you.
Make the right decisions, place yourself right, position yourself right. So 100%. And that's going to be so important, having that trust, having those people around you. They're always saying in your hand, you should have the most 5 important names around there: doctor, finance, financial advisor, etc. Right. And so those are the things that you do it now. It's plan it.
Well, and just like you and I have a lot of these conversations where it's like, it's been since 2005 now. It's 2023. It's been a little bit. We're getting long in the tooth. We've been around here a long time.
Just a little.
What happens in times like this? People start coming and asking questions to people who, like you in the industry, who've been here a long time, who went through the hard time, who've come out of the hard time, and now we're in this uncertain time, and they go, okay, who am I going to go talk to? The new guy, or am I going to talk to the old dog?
Yeah.
And right now you're the old dog. I'm the old dog.
Whoa, don't give out my age here, but yeah.
You just hey, listen, you're older. I'm Balder.
Yeah.
Balder from.
I'm gonna just quiet. I'm gonna just stay quiet here for respectful purposes.
Yeah.
What do you know?
I will say though, 5 years in, even though he's a lot younger, he's outpacing a lot of the other younger folks that are in business, not just in lending, in business.
That's it.
So that's what I'm excited for and promising.
Yeah.
But I think the takeaway for me, guys, is like this is when we build those relationships even further with people we already have.
Yes.
And then the people who are in our corner, so all of our clients listening, our realtor partners watching this, this is when you lean on us
Absolutely.
for other qualified relationships that you lack, but you need in your corner.
Absolutely.
I feel 100% right now is the time where, if us as lenders, and I feel this is our responsibility to go above and beyond just, giving our client a pre-approval, right?
Yeah.
If we see they need help with their credit, how can we advise them we're connected to the right person? If we can advise them to pay down their debt to be able to help them get approved for more, all those little advices, financial like tips is what's going to differentiate you from the client and that relationship that you build, because of the reason that we're not here just to sell you your mortgage. Heck, I want to see you do great in the next 5 years. So that we can then buy another house that's going to help you find financial stability and create that generational wealth for your downline, right?
Mm-hmm.
And I think it's, it's our responsibility to help our clients by doing this, helping them understand what's happening in the financial markets, helping them how to gain financial literacy. And I think overall, that's what's going to help us, retain our, relationship with our clients, because we're not just calling them to sell them on a mortgage. We're not just calling them to, hey, are you ready to sell? I really just want to know where you're at and how I could provide you value or connect you with somebody that will be able to bring you that value, right? And start building your, would you say your financial war chest?
Yeah.
And start stacking up all your chips so that when the time does come, you're prepared.
You're
and if you don't have, somebody in your corner telling you or showing you the way, then you really need to go and find that source that's going to help you gain that knowledge, those skills, because if not, you're going to get it up alive. And I mean this, and I talk this to all the young dads that are like me, because I have a 1-year-old and I have another one on the way. And if I don't get this out and I don't share this message with as much dads or young moms, then I feel I'm not doing my duty as a human, as a loan officer, and as a father.
No, absolutely. That's actually great. You say a responsibility, but when I had my license, I have both my license, real estate, and my NMLS, I'm sorry. I say it's my fiduciary duty.
100%.
You know what I mean? When I put that and I got that license, that's how I treat it.
That's what we signed up for.
We treat people as, when we analyze our financial situation, we put ourselves as if we were there.
That's it.
And that's what makes a difference. That's why, just look at our reviews, guys. Just go in there and see how we all feel, because that is our fiduciary duty, is to help them create wealth and help them understand the importance of owning.
100%.
And so that's where we're at. That's why we do what we do, and that's why we thrive in what we do.
And
100%.
I brought this other interview I found really interesting, actually. So you guys are like, you're already like tiptoeing all over this. It's about having like accessibility to one another, clients having accessibility to us being clearly communicative in a regular fashion, but also adding value and doing it at scale. I mean, this is why we've like tripled down in this year when it comes to media. Is like we're bringing Monday Mortgage Minute at a different level. We're doing the podcast at a different level. We're doing Instagram. We're doing the shorts on YouTube. It's like the reason we're doing all this is so that we are accessible when people have questions, even if they are hesitant to ask them. And that's why you can like rely on your years of experience, your youth and innovation, the combination of those things. Like that's what's going to help people long run.
I mean, Andy, I feel like you bring your A game all the time. Right?
It's a lot of preparation in that.
But that's exactly it, right? That's what anybody, I don't care what you're doing, what industry, even if you just have, you're throwing out newspaper. I don't care. If you're good, you got to put your A game into it to be successful, and to have this type of success.
100%.
Well, I mean, this is the long game for us. I mean, this isn't, the overnight thing. I mean, like I said before, it's already been 18 years doing this. So,
so hey, here we are. Giving out our age, man.
Hey, it's all right. You have a 1-year-old granddaughter. Hey, real quick though, before we end the show, you had a story you wanted to tell us, and I want to make sure I remember. You get to tell us about this experience
one of the things we're talking about is creating those relationships, right? How important are those relationships? Yep. 100%. And as a lender, we create the relationships most of the time via phone. Mm-hmm. We don't get to see the client. We don't get to participate in the looking at homes, et cetera, and driving with them and kind of seeing like, hey, how many kids you have? What are your major goals? Like our conversations are very limited, right? So this weekend, I had the privilege, and I didn't understand what a privilege it was until you really go out there and you hand over keys.
Yeah.
So one of my realtor partners, Herb, amazing guy, allowing me. Yeah, he was out, and so he allowed me to go out there. Hey, can you hand over these keys?
Yeah,
that's awesome.
So I went over there. I spoke with the seller first of all the day prior to because I had to receive the keys.
Right.
Because the listing agent didn't want to, she wanted to take her lockbox and everything and just didn't want to give me a day code because sometimes they go bad. That's the thing. I don't know. But anyways, what do I know about real estate, right? When I'm just a lender. So anyhow, I go in there, get the keys, met the seller, really cool guy, built a great relationship. He's buying a brand new home, moving into his parents' home in the meanwhile until his house is built in October.
Nice.
So I'm like, oh, this is actually pretty cool. Hey, you know what? I'm here. If you need a lender, you want a second opinion, I'm here. Yeah. He's all to it. He's all up for it. No problem. Why not? Nice. Right? And so, following day, I had to go hand keys over. And I'll tell you guys, I was prepared. And true story, my son had an Easter basket that I had to give away. I took it from Dylan. Sorry, Dylan. But I took it for Dylan. My wife was like, you're seriously going to give an Easter basket to your client? Yes.
Yes.
All right. Yes, that's how I am, And of course, I had to give her a card and gift card to Home Depot, wine, so that at least when she's unpacking, she'll ease up a little bit on the wine. You know what I mean? So I figured, like, hey, just kind of chill out, make it fun. We went over there. I tell you guys, I've always had that feeling of. It's cool when you close a transaction and they call you and say thank you, you know? Yeah. But that's as far as it goes. But when you're there and you're hugging it out and you're seeing these expressions and she's dancing, can you take a picture of me? Can you take a video of me?
Yeah.
And that's what I like to share, right?
Yeah. Oh, yeah.
I was just so, my heart was moved. It gave me that different purpose again.
Yeah.
It made me realize that purpose of why I got in the industry, why I'm doing what I'm doing. And it was just
that's
awesome. So I want to share that just because hopefully inspire somebody that, hey, you know what? Yeah. I want to be treated that same way or I want that good feeling. Yeah. And I'll go through pictures here. So there's my camera there, right?
Awesome.
So there it is. Am I getting that right there?
That's awesome.
Or do I go over here? I don't know which one, JC.
Can we put it up on the podcast?
Perfect. There I am. We're doing a video. And I'm telling you, I just had to keep going. And there's more and more and more and more and more and more. I loved it, guys.
Yeah, that's really good.
And that's my fiduciary duty is to make sure 100%. That we bring that feeling of this Navy personnel feeling like it's impossible for me to own a home because the majority of my family don't own one.
Yeah.
And so she felt like, I don't know if that's going to be possible.
Yeah. Wow.
But guess what, Mortgage Heroes family and Mr. Herb Knox?
Yeah.
We made the possible.
Yeah.
That's what our new mission is to really put ourselves in the trenches with our clients and go out there and seek opportunity for them.
Good 100%. For you, man. I'm really happy that you shared that story. Good
Hell
job.
Yeah.
That's awesome.
I was excited.
This is real life stuff. This is stuff that's happening. That feeling that you get, the fighter that just won this past weekend, right? He said, I wish everybody would feel this feeling at least one time of how happy it feels. Yeah. And I feel that, that feeling is the reason why we do this.
Yeah.
That's what moves us.
That's good.
Purpose over profit.
Yeah, that's it.
That's really good.
I love it.
Thank you for sharing that story.
Yeah,
that fired me up.
Yeah, we got to go. We got to go out there and help.
Now I have to get more keys.
Well, I was going to say, let's get more keys, guys. All of you listening and watching, let's get more people their keys so these guys can get their reward and share that experience of celebration with new buyers. So thank you guys again for an awesome show this week. Thank you all for watching and listening and tuning in. Join us again next week for another episode of the Mortgage Heroes Weekly Podcast. Thank you. We appreciate you. We'll see you next time.
Bye, guys.